Hi and welcome to another edition of Weekly Market Analysis by tradersclub.co.uk. This report is covering week beginning 25th of November. As per usual, let's start with our disclaimer. Anything that we discuss here is available in a public domain and therefore it should not be considered to be advice for your trading or investment. We are simply sharing the information for the benefit of the club members. Let's start our analysis by looking at the Apple Computer share price. But just in summary, last week we had a short trading week due to the Thanksgiving holidays in US. Volumes were quite thin and we had a fairly substantial market rebound in general. So indices, commodities all went up. Dollar sold off, especially against euro, sterling, and in particularly yen. Oil rebounded a bit. From the highs after the announcement of the ceasefire, and gold finally broke above inverted head and shoulder neckline, but we can cover all of that later. So let's start with an Apple share price. We identified a bullish hammer reversal on the daily time frame on last Friday, and obviously all of the indicators were oversold, so the subsequent price action was quite bullish. Loads of people kind of reacted to that and the price gapped up. Current price is retesting middle Bollinger Band. If these levels hold, then we have quite a bit of a resistance overhead, and the logical targets for the price extensions would be at 593.69, followed by 606.85, and finally 621.22, which is the 50 period moving average and upper Bollinger Band. Alternatively, price should be well supported by this dotted blue line, which is 560, 564 level. Only the loss of that would potentially target a gap here at 540, but all of the indicators are oversold and crossing in a bullish way. So quite bullish for Apple at the moment. A second chart is the chart of S&P 500 index. We had quite a significant rebound as well. A current price action is retesting a number of resistance areas and levels. First one is fib retracement from 1474 high to the recent low of 50%. In addition to all of that, there is a cluster of these previous lows here around 1409 as well, and this falling trend line as well. So the daily trend still looks fairly bearish unless we see a daily or a weekly close above this trend line and above this level. In that case, we can very easily target 1440 as the next resistance, but prior to that we would need to challenge 1425 level, which is this previous neckline, and also a 50 period moving average as well. If we see a bit of a pullback, that would be actually healthy as long as it stays in a controlled way, and as long as it doesn't go any lower than this 200 period moving average at 1383.24. I would even go to say that this 1396 level would be a fairly significant support area as well. So two ways that we can play this. If we feel bearish, this would be an opportunity to short, but we need to be careful because market is quite bullish. If we are bullish, we would need to wait to see for a breakout of this, possibly a return to retest this previous resistance, and then newly formed support, and then shoot higher. But we had 5 consecutive days of price rises, and this is quite bullish. Nasdaq 100 index, it's very similar to Apple Computer share price. A bullish hammer on Friday previous week was an opportunity to potentially go long. Current price action broke out above a falling channeling trend line. We are still creating lower highs and lower lows. We would need a confirmation of this. It's very similar to S&P as well in that way. Resistance on the upside, it's located here at 2666.88, which is 200 period moving average, followed by quite a significant resistance here, which is the previous low, and also upper Bollinger Band and 50 period moving average at 2718. Alternatively, support on the downside, it's located at 2612, which is middle Bollinger Band and 20 period moving average, followed by around 2570 or thereabout, which is this gap on Monday as well. All of the indicators are rebounding from oversold. FTSE 100, we had a rebound as well, yet again. This index looks much stronger and much more bullish than majority of the American indices like S&P, Nasdaq, and Dow. The price action is currently retesting this rising resistance trend line and also 50 period moving average. Significant resistance above this level, if we see a daily close above this level, would probably be here in this region of 5921.28 or 5932, which is the cluster of these previous highs. Really, there's nothing above here to potentially stop the price going higher if we break successfully higher above this trend line and the moving average. Alternatively, support on downside, it's located here at 5781.32, which is 20 period moving average, followed by these previous lows at 5765 or thereabouts, and obviously 5738 level, 5725 level here, which is a previous low as well. So a number of support levels on downside. Copper, this is a weekly chart of copper, and I just wanted to show you this because it's quite significant for me. We have ascending triangle consolidation range with a clear A, B, C, D, and potentially E pattern on the way out. If these levels hold, which they really should, this is quite a significant support trend line, and we break higher above 360, potentially target 383 and break out higher, then the target for that type of breakout would be this previous highs here, because the number of points at the entry of this triangle added here would target that same level. Alternatively, if we lose that, then more downside is possible, but this is a weekly time frame, and it looks this support trend line could be respected. If we see copper shooting up in a controlled way, this would potentially be bullish for S&P as well, because S&P would follow it into a kind of year end and maybe a Q1 of 2013. Just something for us to keep an eye on. Gold price, we identified inverse head and shoulder last week, with the left shoulder being here, head, and right shoulder was just being formed as we were kind of looking into markets last year. The price action finally broke above this resistance neckline or trend line, as you call it, and it achieved a daily close above. The red flag is stochastics is in overbought, but that can stay in overbought for quite a long time. RSI is in neutral, MACD is just moving into neutral as well. So the price can move higher very quickly without too much resistance. We're currently sitting at the upper Bollinger Band as well. So the number of points from the head, which is very close to 200 period moving average, to the neckline added here would target 1800 or 1798, which is the previous high as well. So everything kind of adds up quite nicely, and this appears to be quite bullish, especially since we saw quite a bit of selling in dollar index, i.e. dollar as a US currency kind of became much weaker. So this is gold. Crude oil, WTIC crude oil. To be honest with you, with such a geopolitical risk and a conflict possibility where Iran could have been dragged in as well, uh, I was expecting to see a higher spike in oil. Obviously, we see a falling wedge here and the breakout subsequent return to retest this previous resistance, now newly formed support. But it's still very controlled. If we saw the same amount of conflict in the past, oil should have shot up much higher in a shorter period of time. Instead, it kind of stayed here below 50 period moving average. And as soon as we had the announcement of ceasefire, there was a big sell-off and then subsequent kind of a little rally or a consolidation as well. The way I'm looking at this, support on the downside, it's clearly located here at 86.38, which is 20 period moving average. Resistance on the upside, it's here around 89.43, which is this previous high and also 50 period moving average, followed by 90.30, which is fib retracement from this high to the current low as well. So a number of things are stopping the kind of upward move, but I would keep an eye on this and act accordingly. Stochastics is curling in downward fashion, so just a red flag for us to watch. Now, volatility index inversely correlated to S&P and majority of the kind of indices and markets. We saw a bit of a sell-off, which is quite healthy. But is this the creation of a higher low? And potentially we could see a bit of a spike higher, which would mean some kind of pullback and additional selling in S&P, which is quite possible. So the kind of resistances on the upside would be at 16.13, followed by 17.29 and 17.70 levels. Alternatively, this 1477 support must hold, otherwise we would see a quick drop down to 1350, 1330 levels as well. Stochastics is in oversold levels and curling up, so potentially a red flag for us. And lastly, US dollar. We saw quite a bit of a topping pattern in US dollar index. This is the index that follows the movement of US currency against the basket of 5 other currencies, and subsequently we saw quite a bit of a sell-off whilst indices and commodities had a rally. So this is quite healthy. More QE3 would mean weaker dollar, and just looking at this, we could potentially find a bit of support here. We are retesting the psychological 80 level, which was quite important before. This is also 50 period moving average and fib retracement of about 50% from 78 low to 81 high. Resistance on the upside, it's located here at clearly 80.66 level, which is 80.75 level as well, which is 20 and 200 period moving average, followed by 81.51, which is its previous high. Alternatively, support on the downside is at 80, which is this dotted line here, followed by about 79.60, 79.70, which is a cluster of this previous lows as well. So far for now, hopefully you enjoyed it. Trade with your stops, respect the prevailing trend, and stay safe. And hopefully we'll talk to you soon. Thanks. Bye.